The JMF Advisors Show is a podcast for business owners, C-suite executives, and entrepreneurs who are looking to build, grow, or even exit a business.
We bring in some of our best financial advisors to interview experts on business best practices, hot topics, and sprinkle in some tax and accounting help.
If you're a business owner, startup founder, CFO, or just starting your side hustle, this podcast is for you.
Okay, welcome to the JMF Advisors Show. I'm Lauren Roberts. I'm a tax manager at JamisonMoneyFarmer, and today I am joined with Viki, who is also a tax manager at JamisonMoneyFarmer. And Viki, tell me a little bit about yourself. You, how many languages do you speak?
Three. So German, Hungarian, and then English.
Yes, very impressive. So today we're going to talk about international tax issues that U.S. Tax filers face, which are, I feel like many people are completely unaware of these rules, much different than maybe businesses that have international tax ties. So from my perspective, I deal a lot with U.S. citizens that go abroad and work, whereas you often work with foreign nationals.
That's right.
That have come in and work. Do you want to tell a little bit about some of the individuals you work with, just some examples?
Yes, so I work with a lot of foreign nationals from Tier 1 suppliers, mainly from Germany, India, and Mexico. And they come over here for about 3 years just to work with the manufacturing business that they are an employee with. And they have an expat contract, which is not a local contract. And usually, the company hires us to help them with the tax filings during that time to make sure everything is done correctly.
Neat. And then what I see usually is just sometimes, government contractors that go overseas. And then sometimes we have UA professors that take, fellowships overseas for a year or two, positions. And sometimes it's just clients' children that, go overseas and they study abroad and they decide they want to stay for a while. So we help with things like that. So some of the things, this is very complicated tax stuff we're talking about today. So this is we're just brushing on it. If you have foreign income, foreign financial assets, or you own foreign business interests, meaning you own interest in like a foreign corporation or LLC, we strongly encourage people to reach out to a tax advisor that is familiar with international tax rules, because they're very complicated and there are very steep penalties that people are unaware of. So we want to make sure everyone complies. So I think the first thing I want to touch on is, well, first of all, in the U.S., you have to report worldwide income. So you have to report, if you go overseas and work, you have to report that if you're a U.S. citizen. And then also, we also have certain residence status that also have to file. So what are some of the ways that foreign individuals have to file a U.S. tax return?
So there are two tests, and one of them is the lawful permanent residence test, and it's either you're a U.S. citizen or you're a green card holder. That means you're taxed on your worldwide income. You file a 1040 U.S. income tax return. Then there's a second test with the substantial presence test, and that's if they're in the States for more than 183 days during a calendar year or a 3-year calculation, they have to file a 1040 as well. The other form or the other tax return they would have to file is a non-resident return, and then they're only taxed on their U.S. sourced income.
Okay, gotcha. So the important thing to take away is these requirements are not just for U.S. citizens. They can also be for certain people with residency status.
That's correct.
And then there's some exclusions, foreign students studying here. I think they have a few years where they don't have to comply. But in general, you have to really talk to your tax advisor and understand if you have a filing requirement.
Yes, so for the days, some of them is commute to your job in the U.S. from Canada or Mexico if your house is in Canada or Mexico. And then if you have a medical condition that you developed here and you can't leave the country, those do not count towards those days.
Okay.
As well as if you're in transit from 2 countries outside of the U.S. and you're here for less than 24 hours. So those are days that would not count towards the residency.
Okay. And that's a similar rule we'll talk about with the foreign earned income exclusion. So first up, I want to talk about when you report worldwide income, there is some relief through the foreign earned income exclusion, and then you also have the foreign tax credit. So let's talk about the foreign earned income exclusion first. So there's two ways we meet that. That's the bona fide residence test or the physical presence test.
Right.
And so if you're in a foreign country and you're employed and earning wages, this is earned income. So that would be like wages or self-employment income. You would need to see if you meet these tests, you can exclude for 2022, it's $112,000. And then for 2023, it's $120,000. And this amount exclusion changes every year due to inflation. So with the bona fide residence test, I usually think that's someone who has social ties to a foreign country. So they've moved there in the foreseeable future, they're going to stay there. So often, if you have a family, you're going to take your family with you, or you may meet someone there and start a family in the foreign country. But that doesn't mean a single person can't also meet the bona fide residence test. It's just for the foreseeable future, you see yourself living there. You may come back to the U.S. to visit or vacation, but you consider that foreign country your home. And that's just kind of case-by-case basis on that. Where we have the physical presence test, which is, that's more quantifiable. So you have to be out of the country for 330 full days in 12 consecutive months. So the 330 days don't have to be consecutive. You can come back for 2 weeks, go back to the foreign country, come back to the U.S. For 2 weeks and out. But you need to be physically present outside of the U.S. for 330 full days. And travel days are important too with that, because you have to, that does count from midnight to midnight. So you have to be out of the country for full 24-hour period. So if you pass over a foreign country, like in flight, that day doesn't count. You have to wait till the next day for the full 24 hours from midnight to midnight. So those are important rules to watch, but that's a really nice exclusion amount, and you want to try to make sure to meet it.
And I think we need to note here that even if you're not here and you don't have any U.S. income, you're still required to file U.S. tax return as a U.S. citizen or green card holder at any time.
Yeah, so even if you don't have any U.S. income to report, you still have to file the U.S. 1040 tax return and report your foreign income on it.
Yes.
So that's the foreign earned income exclusion we're just going to touch on. And again, that was the bona fide residence test and the physical presence test. And then also we have the foreign tax credit. And that's just if you're in the foreign country and you pay taxes there, and that income you have to report on your U.S. tax return, it helps relieve that double taxation.
Correct. And I usually like to get a copy of the foreign tax return.
Yeah.
Just to make sure we pick up the right taxes.
Yes, I've had you read a Hungarian tax return and I think a German tax return before for me. Yeah.
Yes,
To tell me what the actual tax was.
Right. And to take the foreign tax credit, you don't always have to file the form. You know, there's a certain threshold for single, I think it's $300, and then for married friend jointly, $600 that you can take the credit for the foreign taxes for.
Yes, that's right. Yes, there's a credit. You don't have to, as long as the tax is under $300 or $600. So a lot of times we see that with people with foreign investments in their U.S. brokerage account.
Yes.
And so we don't have to file that form, luckily.
That's right.
Let's see. So that's if you have foreign income. Let's move on to foreign asset reporting. And this is something people don't usually realize. If you have any sort of signature authority over a bank account, so it doesn't even have to be your money in that bank account. If you have signature authority like through family or business, yes, you have to file. And there's two forms you have to file. So that we have the FBAR, which is Form 114. And that filing threshold is if all your assets exceed $10,000. And we're just not talking about bank. It's retirement.
Investment.
Any kind of financial.
Anything.
But not foreign assets held in a U.S. brokerage account.
That's right. It's only overseas.
Yes. And then also there's the 8938 form, which is a much higher threshold. I think the minimum, that one you really have to read because it has sections whether you're in the U.S. and you own the assets, or you're outside the U.S. and if you're single or married filing jointly. But I think $50,000 is the lowest threshold, and then it can go on up to like $200,000, $300,000.
It's $50,000 for single at the end of the year, or $75,000 any time during the year, and then I think it's $100,000 for married filing jointly, and then $150,000 is the maximum to $200,000.
Yes, you're good at it. I just know these whenever I have to file it. I just quickly pull up the instructions and find this section.
And on that form, they ask you, hey, do you report any taxes? For example, interest income. Do you report any income that is taxed on that form? It's very specific.
Right. And that's a great thing to point out, because when you have foreign financial assets, if they produce income like interest income or dividends, whatever it is, you need to report that foreign income on your U.S. tax return. So it's not just earned income, it's also unearned income.
That's right.
And same thing, in a little bit, we're going to touch on business interests. So if you have a foreign company, you need to report your share of that company's income on your return, just similarly like you would if it were a U.S. company.
That's right.
So one of the things when we do our engagement letter, the main question on there is, do you have foreign financial assets? So why do we have that on there?
Because the penalties are very steep.
Yes, they are very scary, and a lot of times, again, people just don't realize you have these filing requirements.
Right, and a lot of people do not want to give that information. It's just informational. There's no tax on it. It's just informational, and once you, I think, mention the penalty, they're like, okay, well, let me just make sure I don't have to report anything. But the filing penalty, so per account, if for some reason you didn't know you had to file the FBAR, is $10,000 per account.
Ouch. Yes.
And then if you know you had to file it, but you decided not to file it, it's either $100,000 or 50% of the account balance in your bank account, whichever is the highest.
That is really incredible.
And that's what gets
there.
people.
Yes. So you can do, it could be $10,000, or if they say you willfully neglected not to file, they determine that they'll take half of your account. Or
and we've had several clients, that
they don't know.
I think there's a one-time waiver, and we've elected that several times. But then once you just keep doing it,
yes, you
ouch.
do. You don't want to not do it. And again, I don't know what it is. Some people have a pushback. They don't want the IRS to know these things, but it's just informational.
It is.
Let's see what. Oh, also, I want to point out, I get this question a lot from clients. They're like, well, this account didn't go over $10,000. It's not single account. It's $10,000 at any time during the year, the maximum
in the
value.
aggregate. Yes, in the aggregate. All accounts, aggregate, bank, like Lauren mentioned, bank accounts, investment, retirement, anything. And you don't have to own the account. As long as you're a signer on it, it counts.
Right. So that's kind of the basics of foreign asset reporting. And so now I want to talk about foreign business interest reporting. So this is like a foreign corporation or an LLC equivalent of what we have in the U.S., where someone might have ownership of these companies. And it's not just direct, it's also indirect. So you can get indirect ownership through attribution, whether another family member owns interest, or another company you closely held own, their interest can be attributed to you to get over this. So the forms we generally see are the 5471, and that's for foreign corporation, and 8865, which is for an LLC partnership equivalent foreign company. And those have specific categories of filers, so you just have to look. I think the most common is 10%, direct or indirect, can ownership can cause you a need to file. And then also, even just being an officer or director in the company can. So there's different forms you have to file, schedules, depending on what category of filer you are. So I imagine you see those forms a lot.
Yes, I do. And honestly, the problem is I've had a lot of people reach out to us because they forgot to file them, or they didn't know there was a need to file them because they didn't know the 10%, or they were an officer. So just to kind of, it's important that you reach out to your tax professional and make sure that there are not those filing requirements. You can just to be certain, because the penalties on those are steep as well. The 5471, for example, is $10,000, and I think the 5472 is up to $25,000 now.
Wow. Yeah. And then the 5471 is per corporation. So if you have ownership in more than one company, you can have multiple $10,000 penalties.
That's right.
But there is some relief with that. It's called, I wrote it down and I've done it before, but you can file under the Delinquent International Information Return Submission Procedures, where you say you have to have reasonable cause. And so you just approach the IRS and you send the form and you sign a reasonable cause statement under penalties of perjury that, you didn't know you had this filing requirement. All the income related to it was filed on your return. That's a requirement as well. So there is some relief. And it's just, I understand you want to occur to you, because if it's a corporation, a lot of corporations you don't get income from.
Right.
So you don't, in the U.S. you can own part of a corporation and you have no individual filing requirement for that corporation. So I can see how it would occur to someone that they don't need to report anything related to it if they're not getting any income out of the corporation. But now an LLC, you're attributed, it's just like any flow-through entity in the U.S. You're attributed the income whether or not you get it. So you should report your share of the profit of that company on your U.S. tax return.
Yes, and please make sure it matches.
Yes. That's another thing you've helped me out reading foreign forms. Yes. What are the odds we have like a Hungarian? And I think it's so interesting. Some other things that are helpful out there. So we have these tax treaties. How fun are those to read?
I like to just find the name of what I'm looking for and then look at there's so many articles in each treaty. And most treaties kind of say the same things, but then there are others that are quite different, and you kind of have to study them to understand exactly what they're saying.
Yes, they're hard to read, and they're written very smartly from the perspective of, you read it as if, you're a U.S. citizen living in the United States with a foreign income, or you're a U.S. citizen living outside. So it's like a home country versus foreign country, and I can't remember quite the wording, but I always have to print it, figure out which is which, and then I cross out their language and I put, U.S. and the foreign country.
Because it says other state or this state, and then so I do the same thing. I write it in so I can understand. And then if you are a foreign national, there's also several elections, like the closer home election that you can make. And also, I wrote that down, the residency termination statement that you can attach to your return, which helps you as well to make sure that some of that income is excluded from U.S. taxes.
Yes. If you read the treaties, it may be like Social Security income from a foreign country is just going to be taxed in that foreign country and not on your U.S. tax return. But you have to usually have a little election or something that says it's not taxed because of this tax treaty. And similarly, with self-employment taxes. So I've helped a client that's working abroad and they're self-employed. And so normally they would also have to pay self-employment taxes, but you can go on the Social Security Administration website and they actually have a section for that that's pretty easy to read for the tax treaties based on where you're working and how you're working, where you're subject to the Social Security taxes. So in their case, they're subject to the foreign country Social Security taxes. So they have to get a certificate from that country saying you're subject to Social Security taxes here, and we have to attach that to the room. So it's kind of a bit of work, but you don't want to pay Social Security taxes if you don't have to.
That's the same thing with expatriates that come over here. They're exempt from Social Security and Medicare wages, taxes over here, but they have to show that they pay into the system at home while they're over here.
Similarly, yes. So I find that interesting. So there is some relief to this worldwide income and taxation, but you have to really know the rules.
And you can find the treaties under IRS website for everything that's applicable.
Yes.
Every country.
I would get professionals' help interpreting those. And then another thing I just want to bring up is they also need to file in a state. Like if you're a U.S. citizen and you move abroad, you may still have to file your Alabama tax return. And those rules, there's a rule, but we also look at a lot of legal cases, and that tells us if you still have to file. So just because you're moving out of the country, don't think you don't have a state filing requirement. They're all different. You may still need to file and report your income.
Before you move, really just call your accountant or tax accountant and make sure that you have all your points checked off and all your filings in order.
Right.
Just to make sure, because there's a gray area, I think.
Yes.
You
need to make sure, certain things, you do certain things that show the state you don't really plan on coming back and that sort of thing. But sometimes you don't want to show that. Like you want to be able to come back easily. So
that's right.
It's important.
One thing I wanted to mention, that's just something that has come across quite a bit, is an I-10, which is an individual tax ID number that is given to the IRS by taxpayers or spouses that are not allowed to get a Social Security number. And in order to claim credits and file a return, you need to have an ID number, which is the I-10 number. The IRS says online that you can mail in the supporting documents and the application, the draft of your tax return. But we've come across a lot of problems with that, and therefore I would recommend just seeking an IRS agent once you have your application ready to be filed with the IRS, and they will send you that number within 2 weeks instead of mailing in everything.
Wow, that's nice.
It's asking for a passport, and I wouldn't want to mail my passport to the IRS.
Right, exactly. You don't really want to mail much to the IRS if you don't have to.
That's
these
right,
days.
and I know you know that.
They're a backlog. Yes. But that's part of working with a tax professional is we sometimes learn things that better ways to do things than what it says to do.
Right, and sometimes it's trial and error, for us as well. Like we always mailed them, and we just had a lot of problems with it, and finally I reached out to the IRS and they said, well, we have offices in several towns, like there's one in Birmingham, and you can go take your documents and they'll give you the identification number right away.
That's great. That's great to know that. Can you think of anything else?
I don't have anything else. I think we touched on everything.
Okay.
Yes.
Okay. And again, this is all so very complicated. So if you're a U.S. citizen, or if you're a resident with a U.S. filing requirement, or you're not sure if you're required to file, if you have, foreign income, foreign financial assets, and own foreign business interests, any of those, definitely reach out to your tax advisor. You do not want to misstep here with $10,000 penalties. It's just a little too scary. Right. So everybody should make sure they comply. Viki, I'm so excited you're here with us today.
Thank you for having me.
Yes, thank you.
If you would like us to help your business or would like to suggest additional podcast topics, simply send an email to info@jmf.com.
And don't forget to subscribe to our podcast on YouTube and your favorite audio podcast apps.